S&P 500 bears finally decided to wake up from their summer-long hibernation last week. Plus, United Health picked up a ton of flow after Buffett and Burry announced positions, and Putin steps on U.S. soil for the first time in 10 years. All of that and much more in today's video. Make sure to subscribe, like it below. Let's get started. Investor bearishness has been rising week after week despite the market climbing higher and higher. This typically acts as a contrarian signal, and 46.2% is actually a lot considering we are at all-time highs right now. Also, the market just had a near record week for institutional client inflows. This was the 10th largest week since 2008 during the Great Financial Crisis, so institutions are buying hand over fist. You can see here too that risk appetite for professional investors is surging. Institutional investors' equity allocation rose to 54.8% in July, the highest since the early months of the 2008 crisis as well. So this is now about 4 percentage points above its long-term average, and another data point that just provides us with information on how much buying is going on right now in the market. As for flow, it's starting to tell us a bit of a different story, although slowly but surely. You could see here on Friday, there was actually a decent amount of S&P 500 put orders. For example, 1.5 million in premium for the 630 strike, 1.3 million and 1.5 million, all with a variety of different expirations, very short dated on this last one here. This was executed around noon. And then over here, you can see September expiration and even a December expiration. And these December ones started to fly. Last week, you can see here, both end of November and December were being added quite a bit. And personally, just because we saw this mainly between Wednesday and Friday of last week, I see this as hedges going into this upcoming week because of the Jackson Hole event that is later on during the week. This is a long-term hedge in case something goes haywire. And the reason for that is because we really haven't seen put flow like this at all this entire summer. This is very sudden, and the majority of it isn't short dated. It's much longer dated, typically as a sign of hedging, especially when you have such a big event coming up. And this is kind of what we're seeing right now. So could this change going into the event or maybe out of the event? Most definitely. You'd probably want to see more of this type of expiration. And then also the September OpEx as well. Both of these are shorter dated, and you can see the S&P 500 fall in a quick time period if a lot more of these start to get added. But if you're looking at more so these December expirations, it's not really a telltale sign that this thing's going to roll over in the near term. Certainly could pull back, but if we go to the chart over here, remember what I told you guys in the last video and the week prior to that as well, we have a couple of these dark pool levels that have acted as great support and resistances. This 636.93, roughly 637 has acted as an amazing support, and we're still above it so far based on the close last week. Now, we do have a mini range over here, as you can see, for example, both of these support and resistance levels. So this will break at some point this week, and that should prompt a new trend. Either it breaks to the downside during the week, we see a pullback maybe ahead of Jackson Hole, and then something like this down to retest this area as a support, or if it wants to break out to the upside over here, it needs to crack above 645.61. If that's the case, we probably continue to see a slow grind higher past 650 thereafter. So this is kind of what I'm looking for in the very immediate term before Jackson Hole, because remember guys, after Jackson Hole, there's a large expected move for the week, and things are going to start to get really volatile. We'll do another video on Wednesday to prepare you for that and kind of go through some of the implied movement that we'll see by the event. But as of now, this is kind of what I'm looking at for Monday, Tuesday, Wednesday of this week. Either it wants to break down, and there's a potential long setup off of 636.93, or decides to break out and either take a momentum trade setup with a break above or add on a retest. Like maybe we have it shoots straight higher and then retest come Tuesday or Wednesday and then add on something like that for continuation. Personally, I only see longs as viable right now. I've been saying that all summer, and I continue to say that. We will probably see a change going into September and October once seasonality becomes more bearish. But as of now, seasonality still is bullish. We're looking at key levels getting held. All of these levels, remember the 626, the 627, and then as well as this 636.93, all are being held. So I can't be bearish in the near term, at least until we see more of that put activity pick up in terms of near-term expiration, as well as some of these levels break to the downside and we get that confirmation. Otherwise, you're just trying to short into something that has a bunch of momentum. Not a good idea. So second thing I want to mention is United Health, because we saw a bunch of flow last week, and rightfully so, mainly because of that stake that was announced by both Buffett as well as Michael Burry. So As you can see here, a lot of flow from that week, specifically over 1 million in premium, because that's what I have filtered for, but even more if I went back to 500,000, as you can see here. But I wanted to bring you to the 1 million in premium because there were a couple key orders. The first one over here, we had a noticeable uptick in leap activity. So over here, this one was in the money for the 250 strike, but then we had one of 500 strike for a leap that expires in June of 2027 for 1.7 million in premium block print. And this was characteristic for some of these other larger call orders that we saw. And this makes sense, especially because they see Buffett and Burry buying as a signal of long-term confidence in this stock. So kind of makes sense that they were buying those leap orders. But then we saw later on in the week, this over here, a $2.3 million sweep order for the 300 strike for the 11/21 expiration. So this is kind of a counter trend print and had a lot of premium relative to some of the other ones that we saw with a relatively short dated expiration, all things considered, compared to all these other leaps that we saw for call prints. So this one was interesting. They bought this at 306.71 as the spot price. And you can see in order details over here that the majority and all of them actually in this case were executed above the ask for this contract, and huge volume spike on this contract relative to the open interest. So a lot of activity here, very directionally bearish on this specific 300 put for that November expiration. So I want to bring you back to the chart and show you something. I know you all will find this very interesting. This blue trend line right here, as you can see, goes all the way back to where that pivot started in 2015. And that is held as an uptrend ever since the COVID low over here until we had a breach over here during that whole fiasco with the issues, the DOJ issues for United Health, as well as all the other problems that they had. And then we had consolidation above it, and then it broke down below as of recently, as of this summer, actually. Once Burry and Buffett announced their position in this, we had a huge volume spike, which is good for confirmation, and it actually gapped up back above this uptrend. So this uptrend is everything now. As long as it continues to hold above here, because it did close both the daily and the weekly above this level, this will continue to go higher in the near term as well as the long term. This is a critical level that must hold for this to continue much higher from here. And this is around 297, 298 right now. Depends on the time that is hit, just based on the angle of the line. So this level, definitely mark it in your charts, because as long as it's above, you're looking at something that's bullish. And you could even just type over here, bullish above, and then below you're looking at more so chop/bearish outcome for it. So above here, this is kind of the risk under, with maybe a daily close under as that risk. Otherwise, it will continue to chug higher. Potentially that whale that we saw that added the 300 strike put on this expects it to stay around here or get taken back down under this key roughly 300 or so level. So just wanted to bring this to your attention, because anybody that's a long-term holder now from it, or maybe in a bag holder that was buying during this entire dip, you got to be careful if this thing falls back under this level. Otherwise, it looks good in the near as well as long term, like I mentioned. So wanted to bring that to your attention, as well as one final thing. BlackRock's Bitcoin ETF saw quite a bit of bullish flow last week. So want to bring your attention again to Bitcoin, kind of like I did last week in that Wednesday video. Interesting setup here. I know I have a lot of lines. However, this is a very nice golden pocket retest of the Fibonacci sequence here on Bitcoin, as well as cup and handle patterns. So I'll break that down quickly and show you what that means. Basically, on the 15-minute chart over here, you can see we actually retested both this original downtrend breakout, this green line over here, as well as the 0.5 retracement, almost wicked to the 0.618 retracement. So right in the middle of here is known as the golden pocket. Typically a bullish reversal will stem from something like this if you have a large enough time period and price differential, which we do in this case. So you have both a bullish retest of the golden pocket as well as the downtrend breakout is now back above. This is a good sign. Plus over here, like I mentioned before, you're looking at a cup and handle pattern. So this would be the cup that it kind of formed during this low, this failed breakdown that it reclaimed afterwards. And then this would be the handle up here, and you'd see it shoot much higher. I still am looking for over 140,000 soon on this, just because we have that macro inverse head and shoulder here, which is even more bullish, plus the fact that we have now a cup and handle and a bull flag breakout, plus the golden pocket. Just cannot speak highly enough about this. There's so many opportunities, or so many bullish variables rather that are looking for a lot higher price discovery on Bitcoin right now. So wanted to share that, as well as the last thing here, that IBIT flow. Here's some of that unusual call flow from last week. You can see millions upon millions in premium for LEAP orders. This expires in January of 2027, so about a year and a half from now, as well as some even shorter dated ones like 1.1 million in premium for the 8/29 expiration. So a lot of bullish activity here. Looks like they're preparing for that next leg that I'm looking for as well. So great complementing flow. Plus it matches beautifully on the chart. It's exactly what I'm looking for as a trader in terms of finding an amazing opportunity. Regardless, as always, appreciate you guys watching this video. I'll see you next time.